Cbus manages over $25 billion in superannuation savings for members. Of this, around $7.5 billion is invested in Australian shares that are listed on the Australian Stock Exchange. The growth option, which is where most members are invested, targets a 28.5% allocation to Australian shares. With us here today is Brett Chatfield, Cbus's Manager, Public Markets, to talk us through how Cbus invests in Australian shares. Thank you for joining us, Brett.
Thanks, Emily.
Before we start talking about Australian shares, how has the growth option performed over the financial year to date?
Over the 6 months ending December 2013, the growth Cbus My Super option returned 9.79% to members. This is an exceptional result and was largely driven by very strong returns from the Australian and overseas share markets. Superannuation, though, is a longer term investment, and we would generally expect more moderate returns over the long term, as there will be positives and negatives along the way.
Brett, why does Cbus invest in Australian shares?
Australian shares form an important component of the growth allocation within the fund. While shares are a risky asset class, we do consider that over the long term this risk will be rewarded with returns well above fixed interest and cash. When we invest in Australian shares, we're acquiring part ownership in Australian companies, and we are seeking returns from two components, being dividends and share price growth.
What kind of companies does Cbus invest in?
We invest in around 300 companies, and our portfolio is well diversified across a range of different industries. We invest in many companies that our members would recognise, such as large companies including BHP Billiton, the Big Four banks, and Telstra, as well as some smaller companies such as REA Group, the realestate.com.au business.
How does Cbus invest in companies?
Emily, Cbus appoints a range of specialist fund managers to invest in Australian shares on our behalf. These managers are selected after an extensive due diligence process, and there are a range of different investment styles and approaches adopted by the managers, which provides us with further diversification within the fund. Currently, we target a 25% allocation to one enhanced index manager and 75% to a range of active managers.
Brett, you mentioned that Cbus invests through index and active managers. What does this mean?
Well, index managers largely seek to replicate the return from a defined market, such as the ASX 100 or ASX 200. The manager may also seek to extract additional modest outperformance through the use of enhancement strategies. Index managers provide very low-cost access to the broader market. Alternatively, active managers seek to outperform the index. They do this by selecting and adjusting through time a group of shares that they consider will together deliver higher returns than the market over the longer term. Active managers will undertake detailed research on the individual companies in order to make an assessment of their likely future prospects. Over the long term, we would expect that active Australian shares managers should deliver good above-index returns for the fund. To date, this has been the case, with the fund's Australian shares portfolio comfortably outperforming the ASX 300 accumulation index.
Thanks, Brett, for talking with us about Australian shares.
Thanks, Emily.
Late last year, Cbus Property announced yet another development would be undertaken in Melbourne. 447 Collins Street is in a prized location in Melbourne. The project is expected to create around 5,000 construction jobs over the life of the project. Work is now underway at Cbus Property on the detailed plans for the site. For more information on Cbus Property projects, just visit the website.